Hello and welcome to Arab Business. Egypt aims to fully repay its $3.1 billion debt to foreign oil and gas companies by mid-2016, around a year later than previously indicated, according to the oil ministry. After making payments of nearly $5 billion in November and December, arrears stand at $3.1 billion. Gas production has steadily declined in Egypt, while consumption has risen, but firms have been reluctant to increase investment and exploration and production, particularly in costly offshore areas, until the government pays them. Iraq says it is reviewing its oil production agreements with international firms because falling crude prices mean that the financial cost of existing service contracts were too high to bear. Oil Minister Adel Abdel Mehdi said Iraq is negotiating to restore its state share in oil production contracts with international companies to 20 to 25% after it was reduced in recent amendments to around 5%. A survey of businesses has shown growth in Saudi Arabia's non-oil private sector accelerated to a 4-month high in February as lavish handouts to citizens by the new king buoyed the economy despite the plunge in oil prices. The seasonally adjusted SABB HSBC Saudi Arabia Purchasing Managers Index rose to 58.5 points last month from 57.8 in January. Output growth jumped to 64.0 points in February from 60.3 in January, although new order growth fell marginally to 65.6. Employment growth accelerated to 54.0 points from 52.8. Dubai Parks and Resorts will be signing off on project contracts totaling a substantial 7.5 billion dirhams this year to add to around 5 billion dirhams it did in 2014, according to the CEO, Raed Al-Nuami. The company confirmed it has reached key project-related milestones in its 2014 financial summary released on Monday. Nakheel also recently confirmed that its contract outlay for this year would be around 7 billion dirhams, a pattern in which Dubai government-owned developers will set the dynamics for the construction sector between now and 2020. And finally, Gulf stock markets were mixed in early trade with dividend payout schedules guiding bourses in Qatar and Abu Dhabi. The Doha index edged down 1.27% because of Islamic lender Masraf Al Rayan, which dropped 2.7% as its shares no longer carried the 2014 dividend of 1.75 riyals. Abu Dhabi's market edged up 0.2%, Dubai's index edged down 0.8%, Oman's market was flat and Kuwait inched up 0.1%. That's all for now. For more updates, please visit levant.tv. We will be back tomorrow with some more from the business world in the Middle East. Goodbye.